Hello traders, and welcome to Understanding the Camarilla Equation. Hi, I'm Mark. I'm with the OR Trader, and in this video I'm going to go over the basic structure of the Camarilla equation. In the next video we'll go over trade setups, but in this one I just wanted to explain the basic structure of the Camarilla. So let's get started. The Camarilla equation takes the prior period's high, low, and close to determine 8 key levels of the Camarilla equation or indicator. If you notice here to the left, you'll see it's a screenshot of my Excel calculator that I've made for myself, where I just put in the high, the low, and the close, and it spits out the levels for me. And one thing you'll notice is I've got more than 8 levels. I've actually got 6 high levels, and I've got 6 lower levels, so I actually have 12 opposed to the 8 original Camarilla levels. And what I've done is I've added the 5th and the 6th level, and these levels are basically just targets for a breakout, but I'll get into that a little bit later. You'll look over here to the right, you'll see the formula for the calculator on Excel, and you can pause this video and use that to create your own calculator. There's plenty of free versions online, and if you want, and also a lot of the trading software platforms nowadays have the Camarilla indicator available, and if they don't, you can write the code yourself and have the computer put the lines on the chart for you automatically. So basically this is the original Camarilla indicator levels, and you'll notice that we have H levels and we have L levels. The H levels are the high level, what I like to call the high level, and they're resistance levels. Okay, and you've got H1, H2, 3, and 4. Okay, then down at the bottom we have the L levels, which I like to call the low levels, and these are support levels. And so what you want to look for is you want to look for support at the L levels, and you want to look for resistance at the H levels. The section in the middle between H3 and L3 is considered the value area. Okay, so if you're familiar with market profile value area, this is very similar. This is the value area of the indicator. In the center of the value area, of course, market profile has point of control. This would be the mean, and I trade the ES, and so the ES is a reversion to mean type of market, and so price is generally trying to work its way back towards the mean from the uppers and the lower levels. The 1 and 2 levels, the H1, H2, L1, L2 levels, are generally not plotted on the chart. A lot of traders don't use the 1 and 2 levels, and they'll just take them off the chart. And so what you're left with is just the upper level and the lower level, okay, the high level and the low level. And what I've done is I color code mine to be helpful in just glancing at the chart quickly and knowing what action to take. If you look at the H4 level, it's green, which means buy. Okay, so if we get above the H4 level, we know we're in a breakout, and we want to buy. If price gets below H3, then we know that we're reverting back to the mean, back to the center of the value, and that's a sell. Okay, and it would be the same on the bottom. If you get below L4, you're breaking out, and that's a sell. And if you get back above L3, you're coming back into value, and that's a buy. The 5th and 6th levels, like I said before, are basically just targets. Okay, they're targets for the breakout of the 4th level. So if you break out above H4, then your first target is going to be H5, and the second target is going to be H6. And I can tell you that the 6th level is hard to hit. Usually it takes a trend day to hit the 6th level, and same thing for the downside with the L5 and the L6. So your first target is going to be the L5, and if it continues to go in that direction, it'll be L6. So let me show you a chart of the actual. Here's a chart of the actual Camarilla indicator on the ES, and you can see on this day how price started off in the value area and moved down below L3 and then found support. It took a little while, but found support, came back into value. Once it crossed back over the mean, it started headed towards the upper level. When it got up to the H3, it found resistance and rolled over and moved back down towards the mean, and then again down towards the lower level of support. So this is, I picked this chart because this is a great illustration. Not every day is like this, and once you start putting these on the chart, you will realize that yourself. And one thing I want to point out too is, if you notice the white lines there, the H1 and the H2 and the L1 and the L2, notice how when price left the L3 over here, it came up and found resistance at that L2, and then it was able to push up, and it pushed up to L1, back down to L3, and anywhere where you see a pause, like you see a pause right here, this is showing you that level is key. Okay, and then up here again, you'll see this level is important. So notice how the 1 and the 2 levels are important, but the main feature of the Camarilla is the upper level and the lower level. Okay, so that's the basic structure, and in the next video we'll go over how to trade and place stops and targets. Okay, see you later.